Hi there, and welcome to the preview for the FOMC's March rate decision. So in terms of what we're looking out for, there are three main things in focus. We'll start with the rate decision itself, then we'll move on to the dot plot projections, and finally the rhetoric from the Fed in regards to the timing of their next rate hike. So in terms of the interest rate decision, markets are very much looking past March as a viable time for the Fed to hike rates, with federal fund rate futures pricing in just 4% chance of a rate hike, alongside the latest Bloomberg survey, where only 4 out of the 97 analysts surveyed were forecasting them to hike rates, with the remaining 93 all predicting that they will remain unchanged. So following on from this, focus will quickly turn to the dot plot projections, where there is very much a lack of consensus, with most analyst firms thinking that they will be lowered from the original 4 rate hikes that were projected in their December dot plots. However, it is very uncertain in regards to the extent that they will do this, with most analysts projecting that they will forecast between 1 and 3 rate hikes in 2016. However, they've also highlighted that due to the disparity of what the market is pricing in, which is at the moment just 1 rate hike, and the Fed's projections of 4 rate hikes this year, they've also noted that these projections may still be markedly above what the market is pricing in, and as such may still be well received. So following on from this, we'll then be looking to the Fed's rhetoric in regards to the next rate hike, with most firms looking to June as the next viable time for a rate hike, with even the likes of BNP Paribas, who are currently pricing in 0 rate hikes in 2016. They still project that the Fed will leave a 25 basis point rate hike in June on the table. So in terms of a reaction to this data, it's very unlikely that the decision itself will have any reaction, given that their decision to keep rates unchanged is virtually completely priced into the markets, and as such markets will look to the dot plot projections, and if these come in higher than the market expects, we could see curve steepening alongside strength going through the dollar and weight going into US equities, while if they come in more dovishly than anticipated, we could see the reverse. And finally, markets will then look to the Fed's rhetoric in regards to the next rate hike, and if these are pulled forward, we could see a further steepening of the curve. However, if they are pushed even further back, we may see curve flattening. That's it from me. I wish you the best of luck.